In this video, we are going to talk about crypto's excruciating week as traders bracing for next crisis. So before starting this video, like this video and subscribe to our YouTube channel for future updates. It was one of the most dramatic weeks in the short history of the Bitcoin business, with the revelations that investors fear the most coming from a counterparty. We're sorry, but at this time we are unable to issue a refund. Between a developing technocratic sector with aspirations to restructure the financial system was regularly shaken by the ghosts of prior crises in the old system. Forced sales, margin calls, and the exposure of major collateral as being excessively illiquid during a crisis characterized the previous week. There were unfounded rumors of failed hedge funds, tales of opportunistic predatory trading, job losses, and vehement denials of issues from significant participants. All of this undermined the notion that the new crypto financial system was somehow immune to, or even able to benefit from, the economic realities that are currently punishing the old system. Customers who had placed deposits after being seduced by extravagant interest rates that, looking back, were probably too good to be true were barred from withdrawing their funds by a cryptocurrency shadow bank by the name of Celsius Network late on Sunday. By the end of the week, Babel Finance, a Hong Kong-based lender for digital assets, also ceased taking withdrawals. Both companies gave their customers the reassurance that they were working on it, and they surely are. The Celsius network, at least, is reportedly falling in a Lehman-esque situation, according to research firm Keiko. Because Celsius's issues illustrated, as Lehman Brothers did nearly 14 years ago, how interconnected the main players in the financial system are and how quickly contagion may spread. This week's drama is a prequel to last week's drama and the sequel to next week's drama. Numerous observers have pointed out problems Celsius is having with staked ETH, also known as SETH, an Ethereum-linked token intended to serve as a tradable alternative to the widely used decentralized currency Ether. Every SETH is intended to be redeemed for 1 Ether when long-awaited improvements to the Ethereum network go into effect, but recent market volatility has caused its market value to fall below that amount. According to research firm Nansen, Celsius was one among the parties involved when the UST stablecoin lost its peg to the dollar in May. The incident involving that token led to the spectacular implosion of the Terra blockchain and the loss of tens of billions of dollars. It was principally caused by algorithms, crypto animals, and unrealistic yields of 19.5% for depositors in the Anchor protocol. The research by Nansen showed that Terra's Anchor program had been a significant source of yield for Celsius, according to a statement from cryptocurrency exchange Coinbase. This clearly created the question of how Celsius might satisfy its obligations without that 19.5% payout, the institutional team at Coinbase said. By the way, the company disclosed this week that it would lay off 18% of its previously quickly increasing workforce, joining other cryptocurrency companies like BlockFi and Gemini who are struggling due to the ongoing decrease in asset values known as crypto winter and are issuing pink slips. The drama grew on Wednesday when a terrifying tweet about Three Arrows Capital, one of the biggest hedge funds in the Bitcoin sector, seemed to confirm rumors about it. Without mentioning what this was that was being worked out, one of the company's co-founders wrote, "We are in the process of contacting with appropriate parties and fully dedicated to resolving this out. We are actively in contact with the relevant parties in an effort to resolve this." The creators of the multi-billion-dollar fund disclosed to the Wall Street Journal toward the end of the week that they were considering possibilities like being saved by another business and coming to an agreement with creditors to buy them time to develop a plan. Three Arrows was killed by Terra's demise as well as the SETH issues. In order to maintain the value of Terra's UST stablecoin, the fund made an investment of almost $200 million in the Luna currency, according to the journal. Luna traded for more than $119 in April. Its price right now is roughly $0.000059. Similar to how Bear Stearns hedge funds were among the first to discover the subprime mortgage crisis difficulties, Three Arrows is probably not the only business to experience them. The cockroach notion comes to mind right away. If you see one crawling across the floor, there are usually many more of those unpleasant bugs hiding behind the refrigerator or beneath the sink. Instead of boosting currencies to the moon with tweets full of rocket ship emojis, the hottest cryptocurrency trade right now entails finding where the roaches are hiding and devouring them. Some cunning traders have dispatched bots to scan blockchains for highly leveraged positions that may need to be liquidated since the value of the collateral is no longer enough to cover their loans. They are rewarded for success with a 10 to 15% share of the collateral sale, which is distributed in accordance with automated processes meant to prevent them from going bankrupt. When the week's events were all said and done, the devastation was startling. In the history of Bitcoin, an uninterrupted decrease lasted 11 days. It is currently hovering at the $20,000 threshold, down more than 70% from its peak in November when it was close to $70,000. Ether is currently struggling to maintain a price above $1,000 after trading as high as $4,866 just 7 months ago. The industry's value has dropped from more than $3 trillion to less than $1 trillion. In spite of the similarities to other crises in traditional finance, there is one key distinction as the weekend draws near. Players in the conventional markets at least have the choice to turn off their machines on Saturday and Sunday so they can relax and lick their wounds. As the U.S. approaches a 3-day holiday weekend with forecasts for beautiful skies in New York, those who have a substantial degree of exposure to digital assets will be glued to their screens. The deadly snowfall of the crypto winter is still going strong. Since Saturday, when it dropped to its lowest level in 2 years, Bitcoin has stabilized at just over $20,000, €19,040 per coin. Cryptocurrencies have had a bigger sell-off over the past 8 months, with Bitcoin losing 60% of its value since the year began due to high inflation and central bank interest rate increases that are weighing on investor confidence. From late Saturday to early Sunday, Bitcoin was trading below the key $20,000 mark, momentarily hitting $17,800 per coin. The price of mining 1 Bitcoin dropped to levels last seen in 2020, according to analytics firm CryptoRank. Because institutional investors might sell at the $20,000 threshold, intensifying a downward price cycle, this barrier is important. Due to the COVID-19 pandemic's negative economic effects, governments and central banks kept the money supply flowing, which encouraged investors to pour large sums of cash into the fragile digital currency. Last year, this caused cryptoassets to experience a dream rally. The oil crisis, supply chain bottlenecks, and cheap money started to drive inflation to decades-high levels, though, and the rally started to fade as investors looked for safer assets. In an effort to combat inflation, 5 of the major central banks signaled tighter monetary conditions last week. Investors were alarmed by one of them, the U.S. Federal Reserve, which raised interest rates by 75 basis points, the highest increase since 1994. Because they would make it more expensive for people and businesses to borrow money and would hurt their investments in stocks and cryptocurrencies, they are concerned that rising rates could trigger a recession. Alongside the Bitcoin sell-off, asset values are falling more sharply. The US S&P with tongue sticking out 500 stock index has been falling as worries about a worldwide recession grow. There is now a higher likelihood that the US will go through a recession, says US central banker Loretta Mester. Numerous cryptocurrency projects, including the stablecoin Terra USD and the companion token Luna, have failed due to worries about inflation. Investors were stunned last week when Bitcoin lender Celsius stopped allowing customers to withdraw money. Three Arrows, a significant player in the cryptocurrency market and a Singaporean company, neglected to pay its creditors over the weekend. The issues with the cryptocurrency hedge fund reinforced investors' skepticism. The current decline has also been met by responses from significant crypto firms. Both the cryptocurrency exchange Coinbase and the lender BlockFi recently downsized their workforces by about 20% each. A few Bitcoin exchange websites have ceased trading in order to stop the migration of investors. The enormous crowd of raucous cryptocurrency fans goes silent, including them. They continue to be bullish in the long term even though they do not suggest buying the dip. Now senior market analyst at ONDA, Edward Moya, stated. The cryptocurrency market plummeted in 2021 after institutional investors made record-breaking investments. According to research firm CB Insights, funding for blockchain initiatives will reach $25.2 billion in 2021, up 713% from the previous year. What do you think about this video? Do let us know down in the comments section below. If you enjoyed this video and want to hear from us again, be sure to hit that subscribe button before you go.